So with that, good morning, welcome. It's really nice to have you all with us. Accelerated growth funding is the topic, and let's talk about the context. And the context right now is that we're all sailing in the same ocean. If you see your business as a ship, the ocean as the economy, I promise you, it feels deeply, deeply personal, given the circumstances we're in. But I can promise you this, the apprehensions, the uncertainty, the fear to a large degree that sits in the economy and that sits with us as probably the most important people in the economy for the simple reason that everything we have largely invested in ourselves. We don't have corporate privilege where you have shareholders and asset managers shoring up your business. We are mostly, I believe, beyond startup. So we have a lot invested in our futures, all tied up in the business. And the environment we're in can make for scary times. So the economy today is we sit in a space, in a place where there's a lot of uncertainty, but with every crisis, they come and they go. The economy tomorrow is what excites me, and tomorrow began at the beginning of this month. When I look at the performance of our clients, when COVID struck, no one did anything. And I was pulling my hair out. I used to have a full head of hair pre-COVID because people were saying, no, it's a shutdown for 3 weeks. Don't worry. 3 weeks turned into 2.5 months. And fortunately, during that first month, we got most of our clients to realize that unless you reset your business for this new environment, you're going to be in trouble going forward. The reset work has been done. Building of systems has been done. We saw profitability collapse in March and April. When people took the reset action and started to hold back on money out of their businesses, negotiate hard with landlords, sadly undertake a number of retrenchments in the process, or negotiate new terms with staff, profitability began to rise. A lot of what was fixed cost was outsourced, and we're now seeing at the beginning of this month, an increase in revenue again and an increase in profitability. Last month was the single biggest increase in profitability we saw in our client base. So I think that we have hit the bottom where most businesses have reset their organizations, they've cut back hard on costs, and they're now looking and exploiting new growth opportunities. The strategy has been to reset, in other words, change what you do now compared to what you did pre-COVID, because if you don't change, I promise you, all of your customers have changed. Their problems have changed, their economics have changed, the way they're engaging with you has changed. If you don't respond to that change, you'll find yourself on a back foot. If you have responded to the change, it means you're relevant in the economy today. From that perspective, the next thing we do is we build systems, commercial systems. Why? To get you out of the engine room. Because if you're out of the engine room, and when I look at some of the questions that were sent to me ahead, we want funding for acquisitions. We want funding to buy stock, to buy plant, to buy equipment for 50 cents in the rand, 30 cents in the rand, 80 cents in the rand from competitors that are struggling. We want funding to expand into new markets. We want funding to open up export markets based on the rand dollar. That's the type of funding we have built this fund to support. If you've done the reset and you're doing the rebuild, we're then moving into the reignite. And I will talk at the end of this one more time about context, why the cycle will turn. I've spoken about the purpose of the funding. I think that the timing is right now to start securing a source to funding because the economy in itself is being flushed with supportive funding. It's partly going to the right places, and in many cases, well, we know it's the malaise of South Africa. We seem to have a government incapable of stopping corruption. But beyond that, money is still coming into the economy itself. If you look at what happens, we move towards February next year. We move towards June and August next year. 3 big financial year ends, reporting year ends for corporates and listed entities. In a zero growth economy, where do they get their growth? They get their growth by acquiring us. The mid-tier SMEs have got the opportunity to be flexible, to move quickly, to take advantage of opportunities at a far greater pace than corporates, and certainly at a far greater pace than very early stage startups who are all in survivalist mode. Next year, we will see a massive increase in corporate acquisitions because they're going to rely on our growth to bolster their growth. So let's talk about Aurik Capital very briefly. Who do we offer it to? We offer it to Aurik clients. Why did we build it? It was frustration. For years and years and years, in working with our clients from a growth perspective. So let me just pause for a minute. Mid-tier SMEs approach us to work with them to support growth. We go through a process which I'll describe a little bit later, but ultimately what we do is we design a customized growth plan. We implement the growth plan alongside with our clients. Each and every time the growth has hit a wall. We've managed to achieve a 29.8% compound annual growth rates for our clients. It could have been higher. And the reason it hasn't been higher is because we've relied on funding to support growth coming from banks. But banks in their own right have got funding criteria that are better geared towards the corporate environment. Banks also can only provide debt funding. So unless you have an asset behind it, or unless you've got a whole lot of collateral, the banks struggle to actually fund fast-growing businesses. We then got together with a crowd called Geltec. Gaurav, my partner, put up your hand and wave, please. He's the pretty-looking guy in the red jersey. He's wearing red so we can all see him. If you don't get the funding, it's because he said no, not me. All right, so just be aware. That's him, that's your target, not me. No, jokes aside, we got together with Geltec. They're specialists in raising Section 12J funds. Section 12J is a tax break that's offered to private people like you and me. You can invest money into the fund, you get a tax break on the back of it, and 5 years later, you hopefully get a return if we, from an Aurik Capital point of view, have invested smartly into people like yourselves, supported with the growth plans that we put in play. So we decided to establish an equity fund in order to support the ongoing growth of our clients within Aurik. And the reason that matters to us is because if our clients don't grow, we as Aurik don't grow ourselves. So what do we fund? We fund growth plans that are activated and driven. So not the potential for growth, but the momentum already being achieved in growth. Jan Hendrik, we're going to send out a recording. So you'll have all of this available. So absolutely, please take notes. Rather send me questions on the chat, and then I can address them directly. But this recording will be made available to everyone who's attended here. And we're looking to fuel the growth. So if you've got growth and you can see growth opportunities and you've started achieving some early signs, green shoots of growth in the business itself, you believe you can accelerate it, that's what this fund is for. It is to fuel the momentum of growth rather than an idea for growth. An idea for growth is something we can solve within Aurik itself. Once the idea has been implemented and we're starting to see the early stages of growth, that's when we can bring the fund in alongside. So the funding itself, we can fund between 1 and 6 million rands into your growth. And in doing so, it's an equity fund. So I hesitate to get too technical here, but for the benefit of my own sanity, let me just talk about the two types of funding. We've got debt funding and we've got equity funding. Debt funding classically is supplied by banks. You go to a bank, you say, I need 2 million rand. They say, why? Unless you have an asset underneath it. So for example, you're buying a piece of plant and equipment. They're going to turn around and say, well, we'll give you 2 million rand, but the plant and equipment's value needs to be 4 million rand. And why do they say that? They say that because if you fail to service the loan, they take the plant and equipment, they sell it into the market in order to recover their 2 million rand. So debt funding is where you achieve funding, but from the very next month, you start paying the principal amounts and the interest amounts, and it needs to be backed by security of some sort. Equity funding is in effect where you sell a portion of the equity in your business at a valuation agreed with the funder, and that sale results in funding coming into the business, not to pay for a holiday or a pension plan, but to be reinvested into growth opportunities. So if the business is valued at 30 million rand and you raise 3 million rands worth of equity funding for a 10% stake, the idea is down the line, the business would be achieving a valuation of 60 million rand. The funder then can sell back shares, get their 3 million rand turned into 6 million rand, which is their return, and get out of the way. It's a very useful way to grow your business through stages of growth. In each instance, finding the appropriate funder that understands the risks from stage to stage to stage and has in their agreement with you the opportunity to sell shares back to you, leaving you with full ownership of the business, and them having turned their 3 million rand into a 6 million rand gain, having carried the risk without any security, but taking a ride alongside with you. Different to a bank, very different approach to a bank. It's very commercially orientated, very growth orientated, and very opportunity driven. The application, again, growth momentum, not potential. So we're very keen to fund instances where you look at your competitors and you can pick up plant, equipment, stock at 10 cents in the rand, 80 cents in the rand, 60 cents in the rand. If you've done the reset and you're doing the rebuild, I promise you, you have competitors who have not done that. And those competitors are going to be struggling in this economy. The uncertainty in the next 6 months will make those businesses that have not done a reset and have not done a rebuild even more apprehensive and uncertain. And it creates a self-fulfilling prophecy. It's for that reason that the likelihood is by February next year, you will be sitting in a market where about 20 to 30 to 40% of your competitors that you had before no longer exist. If you're sharp and you're out there and you know your industry and you know your environment, have a look and see what plant, equipment, and stock would be available that you can get at a discounted price. And I'm sorry to say it this way, through the misfortune of others who did not attend to their businesses during the lockdown period. People, software, and marketing. There are going to be more and more and more people coming into the market with real talent. Do those deals carefully if you're onboarding talent. But good people will require you to raise some funding, no doubt. Marketing. Now's the time to start marketing. If you have readjusted your business and you've made your product and your services relevant to the market, let the market know that you're alive and that you exist. If you have got your marketing well built, in other words, it's not about me simply offering a product, but it's about me offering a product more as a solution to a problem for a very well-defined group of people that I know how to reach through marketing. That's what we'd be looking for. To the extent that you have built a customer-centric business and you understand who you serve and you understand importantly what problem you solve for them and what experience they want in having that problem solved. When you've got that right, invest now in marketing, because marketing has become one of the single biggest challenges that businesses face today. We've had a massive collapse in the media sector. We've got Facebook, we've got LinkedIn, we've got Instagram, we've got social media, Google. If you look at the changes taking place over there, it's become very, very challenging. But if you know who you need to reach and you know what message they need in order to hear and see what you have to offer. That's funding that we would certainly apply, because that will yield very quick results. And then software. A lot of us have had to reinvent our business models, part of the reset period and the rebuild period. If your manual systems are working well, how you generate leads, how you convert leads, how you fulfill leads, opportunities to start digitizing some of those processes in order to reduce your operating overheads present themselves. There were some questions over here. One business has got over 400,000 followers on Facebook. They've identified the opportunity to build an app. If that means it gives you direct route to your market, and we can see how, that's a very interesting opportunity to fund. New customers, new markets, no doubt. By new customers and new markets, there might be some acquisitions. Some of you might be in a very strong position. If you've stuck to your knitting, you know your sector, you know your industry, it means you know your competitors and you know the changes in that environment. There might be one or two sweet competitors that you have the opportunity to acquire, whether it be acquiring their staff, whether it be acquiring their stock and product, whether it be acquiring their customers, whether it be acquiring them as a business to create a succession exit plan for yourself in your own business. Get creative around it, because there will be many opportunities like that. And then exports. Recently, at the beginning of this year, we opened up in the UK, and I blame all of you for that. Because our South African clients were saying, we've reset, we've rebuilt, we want to reignite, but with the rand dollar, how can we miss the opportunity of foreign revenues? The UK is going through a whole lot of trauma. Brexit is firmly on the table. And the amount of interest we've received from UK clients looking to strike trade deals with South African clients, because of the Brexit idea that trade needs to be found beyond Europe and Europe alone, those doors have opened. It presents the same opportunities for us here. The funding needs to stay in play for 5 years minimum, a requirement from Section 12J. So why do I say 5 to 7 years? Because if we have invested in your business and together we have grown, at the end of the 5th year, we have an obligation to exit. The people that created and funded the fund want to get their returns, and the only way they can get their returns is if we exit and get our return in order to pass on their returns. So we look over a 5 to 7 year period, those 2 years in between, to exit. And I will talk about how we do those exits a bit later. The intention is to invest to exit. The intention is not to invest and stay with you for time immemorial, sadly. I mean, that would be great. But we have an obligation to provide returns to our investors that created the fund for us within a 5 year period of time. The investment criteria. So we invest in Aurik clients, and I'll talk about how you become an Aurik client and why there would be value in that. And we're investing in businesses classically with annual revenues above 12 million Rand a year. I know some of you might be just under those numbers. It's not impossible to get there within a 6 to 12 month period. It's still worth having a conversation. Our fund is going to grow. We're going through 2-3 more subsequent rounds of increasing the size of the fund. It takes time over the next 18 months. A lot can change, a lot can happen. Who can't we invest in? So Section 12J, in terms of the Tax Act, won't allow us to invest in all of you who are making a ton of cash in, for example, illegal cigarette sales, thanks to government, and illegal alcohol sales, thanks again to government. They've created 2 fantastic market opportunities for some folks. But there are certain businesses we can't invest in. So the so-called sin businesses, if you're making guns, if you're selling cigarettes, if you're selling booze or making booze, we can't invest in you. There's certain elements in the property sector we can't invest in, and in the mining sector. And then there are a few elements in the financial services sector that we can't invest in. Those restrictions are not our restrictions. There are restrictions placed upon the Section 12J requirement by the tax authorities and the Ministry of Finance. This fund cannot invest in distressed businesses. One of the undertakings we made to all the individuals that funded and invested in the fund is that it would be a fund specifically driven to solve a problem that Aurik identified, which is that when we work with fast-growing SMEs or growing SMEs, one of the biggest challenges we have is that the banks can't fund the elements that need funding in order to accelerate growth. So I go back to it. It's ideas like your technology, access into new markets, talent, digitization, opportunities where you can make acquisitions, opportunities where you're acquiring good people, opportunities where you want to invest in marketing. And in this environment, an oversaturated plant and equipment environment, it will be opportunities in plant equipment and stock too. We created the fund specifically for that, and the undertaking we have signed with the investors of the fund is that we will focus specifically and exclusively on growth momentum. In all instances, because Section 12J was released by the tax authorities, their requirement is that we cannot invest in any businesses that aren't tax compliant. So they need to have you need to have your tax clearance certificates in play in all instances. And then finally, what we do, before we even get into the process of funding, we talk to you about a term sheet. This is how we fund. These are the terms of the funding. It either works or doesn't work, but these are our constraints around how we can or can't fund. And what we have found that offers, it prevents a whole big 15-year conversation on whether we should negotiate this term or not negotiate that term. Right now, our reading of the market is that people need to get access to funding quickly and efficiently. It cannot afford to be a drain on focus or attention. We want to get to the side of saying, if we look at funding together, these are the terms and conditions that we are bound by. Does it work for you? Does it not work for you? And in that instance, if it does, then let's proceed. So let's talk about the investment and return dynamics. Between Gaurav and his team and ourselves, we have a massive obligation to the funders. Insofar as we attain and we achieve what we promise to funders, they will continue to provide investment into the fund. And the fund is there specifically to fill a gap for growth SMEs. The startup environment has adequate funding coming through from government sources, and the big business listed entity environment has adequate funding coming through the markets themselves. It's our gap, the mid-tier SMEs themselves, that often find no access to funding. Our intention is to deliver on our promise to investors in order to secure future investment from them, so that whether it be you or future SMEs, we can be sure that we have access to that funding in order to close that gap. So the way we measure risk and performance is we need to know you. We need to know you. And that's why within Aurik, we fund our clients. The way we get to know our clients is we have a number of engagements. We have a good sense as to whether we can provide value or not to you as a business in relation to your growth goals. If we can, we typically engage with the view to run diagnostics on the business, identify where the opportunities are in order to build business systems, identify the strategy, ensure that the strategy makes good sense given the dynamics in the market, changes in legislation, uncertainty in the economy, changes in technology, opening opportunities abroad, performance of the currency, etc., and so forth. Once we know what the growth plan looks like, we work actively with you to implement that growth plan. And through that process, as we see how you behave and you see how we behave, and as we see traction in that growth plan taking place, we open up the funding in order to accelerate that growth itself. On a performance basis, we work with data. So as equity funders, we're not going to be in your business every day, by no means at all. we create an investment dashboard. And that dashboard talks to all the goals that we agreed we would achieve. In other words, the targets of performance. We look at attainment of those goals on a monthly basis because every goal is broken up into milestones on a monthly basis. We look to see if we're on track. If we are on track, we look to see what more we can do to get beyond that track or milestone. If we're not on track, which happens in businesses and especially in this economy, we look to see what we can do to get back on track. From an Aurik perspective, an investment from Aurik is far more than funding. You come into an entire ecosystem, and that ecosystem has a host of other businesses similar to you. It has access into the banking sector. It has access into the corporate sector. It has access into foreign markets, and it has access to a lot of thought, thinking, and capability that sits outside of your current business right now. It really is a partner relationship that we seek to find. From an exit point of view, so we've invested with you. Things have gone well. We've grown. We now need to exit because we have an obligation to. And there are a number of ways that we can do exits. It can be a sale of the business itself. If you decide 5, 6, 7 years from now, I want to exit my business myself, well, where would that sale take place? Could it be to other businesses? Could it be to private individuals? Could it be through IPOs? We have the skills, we've got the network, we've got the relationships to support that process. It's exciting that because in those instances, we are aligned in the exit, which means we want to exit for the maximum possible price. What it does for us as Aurik Capital is it gives us a higher return. We can return that return back to our investors, knowing full well that the likelihood, of them investing back into the fund is quite high. The other option is to do a share buyback. If 5, 6, 7 years from now, we've grown the business successfully together, but you believe you want to continue growing the business and you have a good growth path. So you might be a family business saying, well, I want to grow the business further and pass it on to the next generation. Or I'm 65 years old, I've still got 25 years of gas in the tank, and I want to grow for the next 20 years before I exit. In those instances, we can do a share buyback, and that will give us our exit. The way we do a share buyback is we work with you. We've got 3 relationships with 3 of the biggest banks in the country that understand debt funding. We can work with you to raise the debt, to acquire the shares back from Aurik Capital, so Aurik Capital can provide its return back to its funders. And you've turned your equity funding into a source of debt funding, which once you settle it, leaves you with 100% of the share equity again. So the opportunity, it's working with Aurik. In the first instance, what we would do is build customized growth plans. As I mentioned, the way that we would do it is we would have an engagement first to see if we are aligned, if we understand where the growth opportunities lie in the business, if we can see how those growth opportunities come about. We understand that when you're growing, a business is changing. So we would work with you to run diagnostics. The diagnostics turn everything in the business into data, and it lets us see where the gaps are in relation to scale and growth. We would then build out the growth goals. We would then work with you through a series of monthly sessions in order to implement those growth goals. And with that, we would then see, as we start achieving growth rates, where the opportunity to then fuel the growth through funding presents itself. Typically, that happens 6 months into the growth plan because it takes time for things to start showing and settling. It takes time for us to understand each other. It takes time for the numbers to start reflecting the hard work preceding the growth. It means we are positioned for growth in the market and the changed environment. It means that we've got scale in business built in through systems. It means that we have seen the signs of growth already in play. And for that reason, we then make an approach to Aurik Capital. We pitch for the funding and we secure the growth in order to then attain that exit, typically 5 to 7 years later. So that's the road we would travel together should you choose to consider Aurik Capital as a source of funding. There's a process. Of course, there's a process. There's always a process. It's like dating before you get married, isn't it? Nature, why are you smiling? You used to look too young to be married, my friend. I hope you're not married yet. You've got too much gas in the tank to get married. Whereas Christo looks like he would be good married. Good, solid married. Okay, so there's an application process because really you don't want to waste time figuring out whether we can fund you, can't fund you. You know, a lot of the big government agencies, the IDC is famous for this. You apply for funding, you go through a 15, 16-month process. It all looks good. And suddenly in the last week of the 18th month, you find out that you can't be funded. That's just not the nature of a fast-moving business or the economy. We're going to see opportunities arise. And if you don't strike hard when that opportunity arises, you will miss out on what I believe this economy presents, which is the single biggest growth opportunity that all of us as SMEs will experience in our business lifetimes. You have opportunities like that. So you want to work out very, very quickly whether you would be suited to the funding or not, and whether we would be able to fund you or not based on the criteria that we are bound by. It takes about 10 minutes, it's online. It's closing a week from now because it's really chop chop. It's very, very quick. It's just to get to a yes or no. And from there, if it gets to a yes, there's a provisional engagement, which is a 45-minute meeting. And that 45-minute meeting is for us to better understand the business, to get a sense of whether the approach we have taken, where we work with you to establish a customized growth plan with support in implementing it, is viable or not for you, whether you see value in that or not. If you do see value in that, we will present you with a proposal. If you activate that proposal, we do so through going, the first stage after that is a growth investcom. And that's where we gather as a team. We have 3 or 4 senior facilitators on our side. You present your business to us. We debate the growth opportunities you've seen. We explore them in depth. We test them in order to test their validity and the ability to implement them. We talk to how we can support that process. You get a good sense of how we behave and work. And if we meet minds in that stage, we then proceed with building out the growth plan itself. We move to diagnostics, we set the growth goals, and we activate achievement of the growth goals. As we see the growth coming through, we then pitch to the investment committee for funding. They will take a slightly different view on how they perceive risk. Over here, the view we take on risk is opportunity driven. Over here, the view they take on risk is based on your behavior and past performance in the last 3 to 6 months working with Aurik. If they can see that the goals we set at the beginning of the 3 to 6 month period are being actively attained and implemented, then the funding will flow from the investment committee itself. A valuation is done on the business, the valuation is agreed, shares are acquired, the acquisition funding is then used to implement growth, and thereafter the growth process itself is completed. We continue to work with you in order to achieve your goals by the end of the first year and second year. The investment comes in alongside to accelerate that process. At the end of the 2 years that we work with you through the growth phase, there are 3 more years of investment management phase that take us through to the 5th year, at which point we then are obligated to exit. That takes me to the end of a very quick, I hope, and poppy presentation on how we can work with you, what we can do, what we can't do. And I'm very, very keen now to get through some questions. I want you to talk once more about the economic cycle. COVID will come and COVID will go. Will our government change, and will our government get an economic policy together that would be favorable to the country? Well, I don't know. We all have our own views. Does it matter? So from an Aurik point of view, we don't think so. And I'll tell you why. Over the last 3-4 years, the mess in this economy, largely through government policy and the inability of state-owned equities to deliver on services, has hurt the corporate sector far more than it's hurt the mid-tier SME sector. It's hurt the startup sector far more than the mid-tier SME sector. And I'll tell you why. The very, very large businesses in an uncertain economy find it extremely hard to grow. They've got invested legacy systems. They've cornered certain markets. They're protected and governed by enormous amounts of legislation. What we have seen in our corporate clients is that at the beginning of every financial year, they have changed strategy to accommodate a no-growth economy. That strategy takes a year to implement. That year takes us through to the end of the new financial year. And at the new financial year, what do? They restructure and change strategy again. So growth in the very large corporate market is almost impossible to attain unless the overall economy of a country is growing. In the very early stage environment, it's been so difficult to get traction because a survivalist business used to be a business doing 1 million rand a year. Today, a survivalist business is a business doing around 5, 6, 7, 8 million rand a year. The mid-tier market, from around 10 million to around 300 million in annual revenues, led by founders who themselves are invested in the business and who themselves play an integral part to that business's success. Because those individuals have everything to lose, they have been constantly focusing on making adjustments to the business to keep relevance in the economy. So over the last 5 years, where we have seen our clients grow, number one, eating the lunch of their corporate competitors, because the corporate competitors have not been able to respond. Number two, eating the lunch of their own mid-tier competitors who have not been able to make the adjustments and the changes needed. And number three, trust me, when we work with you, there's only a growth conversation taking place. And the conversations in your head fulfill into prophecies in your real physical life. We specifically craft growth out of any environment in any economy. And those three things have led to growth. So does the South African economy need to grow in order for us to grow? No, absolutely not. It would be wonderful if it did. But we don't rely on that because we know that we only focus on things we have 100% control over. It's for that reason that SMEs that grow now successfully will find themselves in a situation where over the next 6 to 12 years, they will be able to achieve fantastic exits. And ultimately, for all of us over here, what is the final destination? That final destination has to be a successful exit, because all of us over here have invested all our hopes, dreams, and wealth prospects into our own businesses. In the instance where you can get the right kind of funding to support the acceleration of growth in your business over the next 3 to 5 to 7 years, and there are opportunities to capitalize on making that growth happen, it's really important to consider taking it up. I want to address some of the questions that have come through, so thank you so much for sending them. I'm going to start at the top, and please, 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 please use the chat function and let that chat function flow so I can be sure to address them. Okay, so the first question I see and I hear from Christo. I'll mention your name if you've sent it through to everyone. I'm waiting to hear how we can fund expansion and growth through job creation and sustainable supply. Okay, all right, so Christo, my view. From a South African point of view, what does the country need more than anything else? Job creation. Unemployment is not a good thing in any environment. It creates enormous disruption. But here's the thing, two things. The first thing is we don't know what our true unemployment rate is because we have no ability to measure the informal economy, which is far more vibrant and far bigger than I think anybody anticipates. The second thing, if you believe that job creation is an important aspect of why you do what you do, the best way to create jobs is to build a smart, savvy, well-designed business that grows. To the extent that you can automate, digitize, and mechanize in order to become more efficient and attain growth in further and farther markets, you do it. Because as you grow within your industry, within your sector, and that growth translates to opportunities for others. If you grow, it means your customers are growing. If you grow, it means your supplies are growing. That's what our job is from an SME perspective in terms of our contribution to this economy. Oh dear, Arnold, I hope you sorted things out. Running a market, chatting to other market owners, many micro entrepreneurs require funding just to continue with their businesses. Yeah, Dana. So Dana, I know you. I hope you're well, and I hope you're keeping well. And I know it's been a very, very tough time for your traders.
Thanks, Pablo.
With regard to the markets that you run. Very, very hard for an informal business to raise funding in any formal channel. Informal businesses have to rely on friends and family. Honestly, a bank can't fund an informal business. The way the banks fund the informal businesses is through personal loans. So you can get a personal loan, you'll have to sign personal surety. That's the route for informal traders, I'm afraid to say. So you won't really get much access from the banks at all. To Vihan van Zyl, I believe COVID-19 has created lots of opportunities. We are looking to acquire opposition in Port Elizabeth, I guess. Absolutely, Vihan. If you have built the business right and you've done good work, what I would look for in acquiring competitors in order to grow, I'm looking for, and I say this with respect, founders who are older rather than younger, who have withstood a number of crises and have been able to maintain their businesses and are now saying, you know what, this is crisis number 32, I'm done with it. I want out. I want out. The other thing that we have seen COVID do, it's caused a lot of dissent between founders and shareholders. And I say this in service to you, because if we work with you, from an Aurik point of view, we work for our clients. We argue that our role in the South African economy is to work with SMEs that are our clients and to grow them into formidable businesses. And we can only represent the clients that we have as clients. So if we work together from an acquisition point of view, look for businesses that have got founders who are tired of having to do a reset and rebuild to accommodate this crisis, and look for businesses where there's a lot of apprehension and division within the ownership structures. Because I hate to say it, but that's where you get the best pricing and acquisition opportunities. Also look for businesses that might give you access to clients and customers that you don't currently have access to. So we would certainly be able to back that type of funding. How do we define a mid-tier SME? So Sarah Jane, good question. A mid-tier SME for us is an SME that's doing turnovers of above 10 million rands a year, up to 300 million rands. From above 300 million rands, you're starting to move into the early stage of formalized funding structures with big private equity players or the banks themselves. Up to 10 million rands, I'm afraid to say you sit in very much a survivalist environment. And for some of us out there, you might be able to get access to certain tiers of government-supported funding. But the private funding space is very, very hard to achieve in smaller businesses, much smaller businesses. There's a well-worn argument that says you need to rely on friends, family, and fools. And the reason I smile is because that's what I relied on in the beginning. The other way to get funding, of course, is to work with your suppliers and customers very differently. In fact, what I will do, and here's my undertaking, is that on Thursday, if not Thursday this week, Thursday next week, we will do a show on how you can create cash flow and funding through deal making with suppliers and with customers, because that would be useful for all of us to engage in. Does the minority partner become the trust Aurik? So Nonhlanhla, the minority partner would be Aurik Capital itself. Tulo, do you by any chance fund 53 million? Don't know enough to answer the question, I'm afraid. What about businesses that are legacy Aurik clients? Yes, of course. We know each other. We've worked together. Remember, from our point of view, the way that we manage our risk is by knowing who we are funding and who we are working with. Yes, Kun, the copy link for the webinar will be made available for sure. If you're a restaurant group, which obviously sell liquor for sit-down customers, if you're a restaurant group, we can fund you. Very definitely, very certainly. You're not producing liquor and distributing liquor. Liquor itself is part of a menu itself. It's not your core business. So Jan Hendrik, I'm hoping I've answered that question that you sent out. Multinational businesses in 3 countries, head office in South Africa, investable. Kun, absolutely. You know what, increasingly what we're finding is that South African businesses that have got good growth prospects. In fact, very recently, about 2 weeks ago, we did a show. I did a show with Bruce Whitfield on the money show on 702 and Cape Talk about why now is probably the ideal time for a South African business to build itself for international markets. There's quite a bit of structuring that's centered around that. One of the constraints in the Section 12J environment is that we have to invest in South African businesses. Not South African owned, but South African businesses. In other words, you're domiciled over here, but you can be exporting and gaining tremendous access into foreign markets. But you need to be domiciled over here, and you need to be taxed within the South African context and environment. There are a number of structures that you can deploy where you contain parts of the business over here. Other parts of the business are structured elsewhere to access different markets. It's something we can look at. It's something we can talk through. We'll be able to give you a very good sense as to what the constraints of Section 12J are around that. And the best person to talk to that would be Gaurav. Yes, thank you, Kun. Gaurav already answered that. Thanks very much, Gaurav. Ritash, how can we access a database of companies in the UK that want to partner with South African companies? So what we do with Aurik clients, both here in South Africa and the UK, is we have periodic deal-making roundtables where we get our clients in the UK, we get clients in South Africa that we believe are well-matched, and we do a Zoom-based deal-making facilitated workshop together. Typically, it's where UK clients are looking for export markets in South Africa, and South African clients are looking for export markets into the UK, Europe, and the US. Running out of friends, family. It's amazing how quickly that happens. You know, I'm always fascinated by a comment like that, because whenever you have the idea, you share it with your friends and family. And because South Africans are too polite to say no, I think it's a really crappy idea. They give you lots of positive support. But in the process, when it comes to them taking money out their pockets to back your idea, yeah, well, Do you fund, from Ritash again, do you fund management buyouts and partnership buyouts? Yes, we would definitely look at that. I think that there are real opportunities for that to take place. You know, in the professional services environment, specifically, so engineering firms, educational institutions, there's so many of them, architectural firms, and so it goes. In any area of professional services, your exit plan is largely going to be through succession. And the management buyout is a succession exit. So it's something we would very definitely look at, without a doubt. Yes, Henry, come on board. We have the capability to reach over 10 million. Would you consider full growth investment? What we would do with you is work with you in order to get to above 10 million. And the moment we do, we would open up the fund because we have evidence and demonstration that we're on the path of growth. We have a software, we are a software technology company being digital solutions to solve financial inclusion, etc., etc. Do we qualify? Yes, if you're a technology company, without a doubt you do, Farida. Thanks, Gaurav. Cheers, everyone. Let me address some of the questions that have come through. There were some really interesting questions that came through in the registration process. Very interesting from the food services sector. There are going to be a lot of changes coming through over there. The food services businesses, restaurants in particular, that have managed to survive so far, I think are very well geared for growth opportunities. Can we invest working capital, investment into a marketing mix to boost revenue, staff engagement and fulfillment, and to enhance the technology and scale reach? All of those qualify for investment, and they're all valid. All of them are valid. I go back to it. I don't know if you guys have seen recently, the big changes that are coming in social media are being led by who globally? Not the Americans, but the Australians. The Australians are deeply concerned that media is going to be reduced to Facebook and Google. And what they've now required after 6 months of negotiation is that if Facebook or Google post any content coming from a registered news organization, the revenue they make by posting their content needs to be shared with the news organization itself. They're very actively trying to broaden the landscape of media. And that's a good thing for us, because if all of us are reduced to only having access to market from a marketing point of view using Facebook or Google, trust me, we're all in trouble. In South Africa, we've seen some recent changes too. Media24 has erected a paywall. It's going to be interesting to see what the response is. Daily Maverick has now invested in producing a weekly newspaper, a physical newspaper, which will be made available through Pick and Pay every Wednesday. They've run their stats, they've done their research, there's demonstration that there's value in that. The idea of banner ads is being questioned actively at the moment, hence the media paywall that we're seeing in Media24. So there are lots of changes afoot from a digital marketing perspective. From an Aurik point of view, what we are seeing is that the traditional pavement pounding marketing, direct marketing strategies are the ones yielding the best results. So should we work together, we would work with you, obviously, to implement digital marketing capabilities, but we revert extensively back to very traditional marketing capabilities too, because that's where you have direct access to your market. Help us through the next 3 to 6 months and possible international expansion. Very definitely. That came from a business involved in software, IT infrastructure, the establishment of IT infrastructure. There's a massive growth opportunity over there, obviously. Increasingly, and in this recent book, which we haven't announced yet, Reset, Rebuild, Reignite. It's a book that was released, I think, on Saturday. what I've written in that book is how you reset, rebuild, and reignite in times of a crisis so that you can thrive. And the insights in that book come from us having spoken to about 60,000 SMEs in South Africa, the United States, Europe, a couple out of Singapore, and the United Kingdom. We've seen what people are doing that worked. We've seen what people have done that hasn't worked. And we've distilled an action plan around how you reset, rebuild, reignite in any crisis, not just COVID. If burst water pipes, the loss of a partner, the failure of a major client to pay you, the loss of a lease when you've depended on a physical presence in order to build a business. There's a lot of content in and around that. And what we are seeing over there is that in every crisis that has come and gone over a period of time, the one big difference in businesses before the crisis and businesses after the crisis is in every instance, the business after the crisis has adopted an increasing level of technology, be it software, be it plant and equipment, be it automation. There's been an increase in uptick in technology. And obviously, businesses involved in the technology sector have grown in accordance with that. So very definitely, we can help you there. Funding to be used to purchase smaller machines to target SME markets with annuity rental models, absolutely. Acquisitions, investment in new tech, expertise, yes, I think we've covered that. I think I've covered most of the questions over here. Increased distribution, very definitely. There's a real opportunity to reach into new markets. Purchase of competitors, for sure, without a doubt. I think that's going to be one of the biggest opportunities. You know, the English have got a very particular manner of speaking. And one of our clients in the UK is a group of solicitors. They don't like to be called lawyers. Lawyers are, it's American language. So they either, attorneys is American language. And I kept on referring to attorney firms. They said, no, Pablo, we are solicitors. One of the opportunities we've seen is we think that there's a real opportunity to hoover up a lot of our smaller competitors. Would that be acceptable to you? And the whole manner of speaking. But the idea of hoovering up smaller competitors, if there's real value in doing so, as opposed to just simply outcompeting them, it's something that is available to all of us in the mid-tier sector and something we should consider. So folks, I think I've covered most of the questions. I really do hope that I have. We are out of time. In fact, I'm 7 minutes over. I hope you found good value in this presentation. Food for thought. We will be sending an email to everyone who has attended. The application process will be on that email. It's simply a URL. Click on it. It's a form. It'll take you about between 5 and 12 minutes. Come through to the other side. Let's have the conversation at least. And if we have a meeting of minds, let's get into a place and a space where we can make up for the revenues lost in the last 6 months, but also in the midst of a crisis, let's get the business to its next level of growth and value so that in the next 5 to 10 years, you, alongside with us, can achieve and attain a really sweet exit. Thank you very much for making the time to be here. I look forward to seeing you all on the other side.